There you are. How are you today, my trading warrior brother? Unmute. Hope you have good volume today.
Are you able to hear?
Can hear you now.
Yeah, I can hear.
Okay, good.
No problem.
Yeah, you sound pretty loud and clear this time. You want to share your screen?
Yeah, I'll do that.
And I thought we'd start with, Ronit sends me a lot of charts to my message section on Twitter. And you showed a Dow chart that the cycle topped right on time.
Yeah.
Not that you haven't had misses about it, but that was uncannily accurate. You want to just start there, or you want to talk about? Okay.
So we'll start something with some unique concept of price stability. So this is a very famous temple in southern India, and it was constructed 1,000 years back. It's one of the largest temples in India. So what's great about it is that on a particular wall, it's written that there was a king who actually used to, they used to offer the gods fruit per day. So what he used to do is approximately there were 150 bananas which was served every day. So in those days, they actually followed the lunar calendar. So there are 360 days, as you can see over there. So totally, they needed around 54,000 bananas every day. So what they did is the cost of each banana was 1 divided by 1,200. That was the cost of each banana. So totally, he actually needed something like 45 coins. So if 45 coins was the interest, what should have been the principal? The principal was around 360 coins. So what the king used to do is that he used to split it between merchants at an annual interest rate of 1/8. So that he used to get 45. Okay. So what used to happen is if you reverse calculate, it's actually 12.5% per year. So what does it tell you that? They never had inflation for 30 to 40 years till he was actually the king. So what it tells us that per month, if the interest rates are 1%, it's like a limit. It's like RSI 70 and 30. If the interest rates per month is 0.618, which is around 7.5%, it should not go below that. The economy doesn't collapse. So if it is more than 1.618 per month interest, that comes to around 19.5%. That's technically hyperinflation. So in those days, people actually knew about good governance. So same thing goes with this is one year bond chart of interest rate chart of US. So what does it tell you? That during the 1990s, the interest rates actually came below 7%. And that's why you hear this term in pension funds, they need actually 7 to 8% to survive.
Right.
So there's something uncanny about it. So let's move on to this thing. This is something which I was actually working on last week. This is actually a Fibonacci numbers. So on top of it, if you actually take 2020 as a base, where all problems started, particularly, if you actually subtract Fibonacci numbers 1, 1, 2, 3, 5, 8, they're all panic cycles. If you see, there are major panic cycles. 2018 was trade wars. Then 2016 was there was a financial problem in Europe. I think we had a low in oil too. 2008 again. If you subtract 13 from 2020, and if you keep going, even 1932 is there. If you actually check on left hand side of my screen, I hope you are able to see my mouse.
Yeah, we can.
So there is 1877. That was, I think, railroads boom, which went bust at that time. There was a panic of gold in 1877. 1788, again, very interesting, French Revolution. So it is, this is actually going back Fibonacci numbers. I think even Robert Prechter actually talked about this, but this is something really strange, why it is happening. So if you move forward, it is 2021, 2022, 2023. And then there is 2025, 2028, and 2033. So you can actually do lots of permutation combinations. You'll get lots of numbers. So and even 1987, 1929, you can actually see over here. I marked it as red. So that was something. All these years are actually connected, just like tops and bottoms. So
Okay.
this is the Dow chart, which we actually did. So what I did is it's a log chart, which is a channel chart from for the last 100 years. So if you carefully observe, if I take the base as 1974 December, and there was a mini crash in 1987, if you actually extend it Fibonacci, you get October 2008, and then there is February 2020 on the right hand side. And ironically, it actually bounced off, after 18,300, it bounced off. And now I believe that this September is a very critical year, and it is making a high in this September. So that's not very good sign. So that means that there is a probability that there is some event which is going to trigger off. I don't know what it is, but I think that it's going to be the energy problem. So we'll come on to that next.
Okay. Yeah, your Ronit is a big proponent of sharply higher commodity prices.
Yeah.
Okay.
So initially, what would actually break the camel's back? So that's the thing. This is again a channel which I think it's a possibility if Dow Gold ratio has to come to 2027 as a low. So what I did is I connected 2002 and 2009 bottoms, and that actually I have extended it. So you can see over there, this is a pitchfork which I've drawn from 1929. So you can see 1987, there is a parallel, it drops within the channel. Same thing goes with 2020 over here. So it's strange that it is following the channel. Now, why would actually, if oil goes up, what is the percentage of CRB which will go up? We have to actually be very careful that what if the central planners, let it run, or will they collapse it? So you can see the channel over here. It actually connects the previous two tops, and right now it's an breakout around 225 or something like that. But even with 207 or 200, this is Thomson Reuters CRB index. So how much
you
can
think CRB could go to 331? Am I reading you correctly?
Exactly, perfectly right. So that's around 30%. So if CRB has to go up 30%, how much should oil move by? Probably at least double, maybe. So that could be, if oil is a disruptor, then probably metals could go up and then actually collapse because of, demand, supply shock or demand shock. So the most important thing over here to see is if oil is moving up, natural gas, actually, we discussed this last time when it was around 3.7.
I remember that. Yeah.
So that's actually a very good cup and handle or something like that, but it's a long-term breakout. So if you carefully see, the highs were like 15.62. The lows were like 1 approximately. So if the breakout was 13, you can see the Gann grid. It actually fits in very well. So the next stop, once it has crossed 3.5, it's 7.2, where we'll get some kind of correction, but it's on a parabolic path, just like what Bitcoin was in 20,000 or something like that.
Okay.
So that could be a conflict with Russia too. We don't know.
Who thinks Ronit's charts are cool? Give me a why. I mean, do you see all the work he puts into this stuff? Look at that. I mean, you don't see stuff like this. He's a thinker. Go ahead, man.
Okay. So this is the connection which I did. What is the breakout level? That's around 2.53.
Yeah.
So that's why I was actually last time talking about it could be 17. I think Ben was the guy who was actually another guy. He was also looking for that kind of thing. So it was a good trade, actually. So
well, that's what they pay in Europe, buddy.
Yeah. So there is a possibility that this whole great reset and other things, probably normally what happens is natural gas, if you see September, October, November, they have actually clocked 30% per month, a majority of the times from 1990s. The data says that majority of the times before Christmas, natural gas prices rise dramatically for whatever it is. It could be because of heating.
Cold weather.
Yeah, this time it could be even worse. What if it actually quadruples from here? Europe is actually in big soup because of that. But
Yeah,
if you see the
they're having the whole world's having energy crises now. It's not related to oil. It could be the grid. It could be other things they use to run their generators. But yeah, the whole world's in an energy crisis. I saw utility bills. Utility bills really skyrocketed. I think in the UK they're having a lot of problems. Consumers are paying outrageous prices for energy now.
correct.
Right?
I think the same problem is with Middle East also. They're actually telling everyone to use less power, that is electricity. So everybody cannot be on. I don't understand why people want to get into batteries and solar and other things. What if there is, you know, there are volcanoes erupting, which says that there is a global cooling which is going on. It's not climate change or global warming. So it's quite worrying.
Oh yeah,
But
I've read about the upcoming ice age.
yeah, they have talked about this Gulf Stream. There was a movie on that also, 2012. They talked about the Gulf Stream when they were digging oil in Antarctica. And Alaska and Antarctica are still in the news. China wants it, Russia wants it, US wants it.
Someone's
So,
asking, Ronit, can I know this EMA or SMA, which time period you're using?
okay, I use something like 21 EMA, LWMA, weighted moving average. So in a monthly average, why I do that is I simply calculate 1.5 years time, approximately 17 to 19 months minimum.
Yeah.
So what happens is that it's just like 9 months, right? When a baby is born. So that's how they use 200 EMA. So if you actually see the 3-month average, then it's actually the tangent is it's actually rate of growth is higher. So if you really see that a month on month, it starts clocking approximately a certain percentage positive volume price action. So I use 21 WMA more than anything else, not EMA. Okay, so let's go on to that. So next one, this chart is I think it's oil.
Yeah, it
So
is.
you can see the model actually I've done it. I've made it simple. 69 is a pivot, $70. What could be the peak? $130. So even if you take 6.5 as the low, which was the contract value in last year, so the breakdown was $78 in 2019, close to that. So that's around $70. So the breakout is 60, 62 means it could be $130 very easily. So
Okay.
$70 is a very good trade, a good entry point where the risk is actually very less, and you can actually ride on this particular energy crisis. That means Chevron or whatever companies, $69 or $70, that could be a very good pivot where they're trying to pressurize last time. Last 2-3 months, they're actually trying to, every country is actually trying to sell off its reserves to push the prices down because they suddenly realize that they are in trouble. Okay. So this is another viewpoint where is the same chart, $72. Once that breaks out, it's 130. So now what I did is this is a combination. This is actually a Dow gold ratio. Why this is actually important is because everybody is frustrated with gold. Why actually gold is not moving up and the Dow is actually stable around that 19. So the good news is if 19 breaks down, you can be long gold and short Dow. Till then, you watch that 19 very, very carefully. That's why I put it over there, the slope, because the chances are that it'll actually hit at least 16, which is the yearly level. So that means gold post 1820, it's very bullish. That's why every time it comes up over there, there is supply to pressurize it. And it's not a conspiracy. If you really see that when silver was breaking out in February, the Indian government actually put taxes and pushed the prices down. So they are all actually, it can't be a conspiracy. The data shows. So watch out for 19 Dow gold ratio. You could actually make a handsome profit of 16 or 15 or even 10, I would say. So this is a long-term chart of Dow gold ratio again. It's forming a nice wedge. And you can see over there, even in the 1970s, the Nixon shock, it actually broke to the 19 ratio, even 1929. So it's quite balanced, very well balanced right now at 19. So that's what decides what happens to interest rates and commodities. If anybody were particularly looking for the Dow levels, this is monthly level, which is very easy to follow. If 35,600 is crossed, then stay long. It could be another pop before the drop, 37,400 or even 47,000, because they can increase the debt. But if it breaks below 33,745, then it'll suddenly drop another 10% very quickly, and then you'll have a panic. So that means that something has gone wrong in commodities. We need to analyze what happens in Europe. Okay, same thing, Europe. So this is a better picture. A bubble can actually go till 47,000 also, depending on the debt. So that's long-term averages. So right now you can actually keep 35,600, the recent top, as a major top, because why I think this is a major top is one reason is it's doubled from March 20 within 17 months. And did you know, Dale, from 1929 to 1932, how many months it declined? It actually declined 34 months. So half of it, technically 9 or 17 or 34, the decline or advance stops. So right now, there is a 17-month advance from March 2020. So this could be a possible trigger, September. This is again, I did a Fibonacci extension of the Dow. What if this is the wave 5? So wave 5 pops around 36,000 and there is an arch. So the wave 3, I'm not very good in waves because I still confirm it with Gann charts. So those are Gann fans to actually tell you what exactly the levels are. So 36,650, again, it says the same thing. Now, what I did is I put a Fibonacci extension over there. You can clearly see something happened in September and you got a red candle over there. So this is not by accident. There is some movement which is happening, and there is some Jan 24th, 4 governments are meeting actually to discuss the Quad, how to tackle China, but it could be something else, a conflict which is emerging. So another interesting fact is, if you see the wave 1 and wave 5, those who are elite wave experts, you can actually see 649 from March 2009. That's around 97%. It has gone up. So same way, 18,300 around 97, 98%. It actually matches. Another confirmatory signal. Now, looking at the dollar, what would actually crack the dollar? If this time, if there is a panic, will the dollar go up or not? So if you carefully see the stability of the dollar from 1970s, if you see, that's around 92. It's been maintained over there. Whenever it went below 92, there has been inflation, and above 92, it's been deflationary. So what I think that is that the dollar actually could drop to 83 just to get everyone wild up that the dollar will collapse and Europe will come on top. If the dollar drops around 10%, so the euro could be like 1.37, 1.3, 1.37. So that's where we get our commodity rally.
Right. Okay.
So it's inversely correlated.
Yes.
Now this is the euro. This is where the interesting part gets. For whatever reason, if it drops below 1.17, if you really see last 2 months, that 1.17 commodities actually dropped like a pin. Copper, it dropped from 4.8, 20-25% within a matter of no time. But something actually held up that euro around 1.17. So that's where it actually respects that level. So if it is not, it's not going to break 1.17, then there is a higher probability that we could get a high somewhere around December to March 2022. You can see that 1.36. So if you really see the China problem, which started this real estate crisis, It started in May 2021 when the euro was around 1.23 or something like that. So it has not crossed that level. So something behind the scene is happening, which is actually making somebody nervous. But if it pops above 1.23, wait for it to actually go till 1.37 before the final drop starts.
Okay,
This is, yeah.
All right. So you're saying we could go to 135, 137, and then have a huge bull market in the dollar after that.
Exactly. The dollar could actually really go to the moon, something like 200, 250. That's quite a bit, but one step at a time. So let it cross 100, 120, but it'll be quick. It'll be very fast because if all the assets prices start dropping faster with commodities, then there is only one safe haven. Even if bonds start falling, everybody wants to get into cash. And the way the export-import market or the trade finance market works is everybody borrows money. So suddenly they have to return that money. So the flush will happen at that moment. Not yet, but that's where our hint is that if the euro doesn't drop below 1.17 or copper doesn't drop below 4.2, if you really see 4.2, it was there is a lot of support around that. It dropped and then it actually rallied back on. So some.
Okay, just lost your volume, buddy. Let's see if he comes back. So Anthony, what do you mean? Okay, there you are. All right, we lost you for a little while. So okay, so gold, what are you saying there?
Gold 1827. 1827 is that level where it'll start breaking out to 50% rally. You remember I told you CRB could rally 50%? So gold could rally to 50%. That's around $900. So that's around 2,800. Sure, possible. But wait for that 1827. You can see over that slope. I've marked it over there because there's a lot of pushback around that level. So that means the USD yen is actually not started to collapse below 109. Everybody knows that USD yen is inversely correlated to gold. So that's where the real thing is. Same thing goes with silver. Silver is actually maintaining that pattern. So here, $25, $26, that's your green signal that, okay, it's ready for $70 to $100. So till then, just watch it. What's really happening? That's
well, why not try it around your pivot, 1892? If we get down there.
Which one?
Your pivot is 1892. So what if we pull back to that again?
Yeah, if it goes below 1892, that could be the final pivot. Pivot in the sense, how much can it drop from there? It could again go back to $12. But what is the case of the dollar? It must be 100 plus easily. So people won't give up this time very easily. But look at the peak over there. I'm talking about this is on a weekly level. So there is a possibility that it could gain so much percentage. So that's, you can see over there in 1980s, it actually gained quite a 400% from there. Right now, it's not even like 20%. So 400% from $25 should be $100 approximately.
Yeah. Okay. All right. I think we're about out of time. So if you want to show one more thing.
I would show quickly. This is very important. If the euro is actually going to go down, euro bonds could actually break down around the level 171. Same thing goes with treasuries. So if it drops, it could drop very fast. That means if euro is going to gain, euro bonds are going to sell off very rapidly, 156 to 130. I don't know if the ECB will allow it, but there is a big probability that there is an event risk which will trigger this off. So watch that 171 very carefully. Same thing goes with treasury bonds. That 167 to 162 is a very critical level. That could also go down to 130, something like that. So that means the rise in interest rates could be because of higher oil prices. I'm talking about $130 to $190, and something like natural gas should be even higher. So I could show you one chart where quickly I can tell you natural gas. there is one natural gas. Yeah, 1 minute. No, the Dow divided by WTI. Yeah, this is a very critical thing. Look from 1900s. So this is Dow divided by oil. Normally, when the panic hits in 1960s, 1929, the ratio was around 340 to 400. Now, if it has to go back to normal to 1982 or 1921 to move, that means either Dow has to drop dramatically because of oil spike, and there could be a energy crisis. So that could be three to four times, at least 3 times from here oil. So that's around $200 very easily. So and this is a very good chart where 4 months back I actually saw that the ratio of crude oil to natural gas was breaking down 20. So that is a sign. So if natural gas should be hitting $7 or let's say $10, 10 into 13 is approximately $130. So it's actually mean reverting. So it's done that in the past 2018, 2019. But this time, natural gas and oil both are going together. So,
okay, buddy.
I think that I'm done.
That's gotta be it.
Yeah, yeah.
Okay,
so,
I mean you've
if you have any questions, you can ask. So anybody has any questions?
Any questions? Quick questions for Ronit? Kay is saying thanks, great show. A lot of people stuck around to see your stuff, Ronit. Thank you so much for stepping up today. Anthony said great. I appreciate it, my trading warrior brother. Thank you very much.
I think we were discussing Dow Transports, right, Dale? You can see the cycle over here. Dow Transport. I think you were talking to Blake about it. You see the cycle over here. 2008 May, 2011. You can see the cyclicality. I'll move it and show it to you.
And here we are again.
Yeah. So that means all the 4 times or 5 times there was some oil crisis or trade wars which is happening. So this is a larger wedge if you really see.
Yeah.
So that's a bearish wedge. So that answers that there is a possibility that there could be an energy crisis.
All right, buddy. So thank you, my friend. Appreciate it. Super commodity bull with lines in the sand for all of his ideas, which is key. If an idea is negated, go the other way. Thank you very much, Ronit.
Thanks, Dale. Thanks, Dale.
My trading warrior brother, Ronit. Follow him on Twitter. Your Twitter handle again, buddy?
Ronit9q at gmail.com. At Ronit9q. You can actually
at Ronit9q to follow him. Okay. All right. That's a wrap. You could join the guys in 12 minutes for Morning Edge. And we'll see everyone to wrap up the week. Good hunting, good luck, and good fortune. And don't just count your pips and your charts, count your blessings. See everyone tomorrow.
Thank you, Dad.
You're very welcome. You're very welcome too, my friend. Adios.
Adios. Bye.